Good morning, dear students. In today's lecture of the subject insurance, we will be discussing the content economic significance of insurance. Okay, see a brief revision to the concept of insurance, then we will go through economic significance of insurance. Okay, just remember last few lectures in which we have discussed the basic concepts which are included in the terminology of insurance. Okay, yes, what is insurance? Insurance is a contract between two or three parties. Okay, insurance is a contract between two or three parties. Who are the two parties towards the insurance contract? Yes, the first party towards the insurance contract is known as insured. Okay, who is insured? Insured is a person who is in need of insurance policy. Okay, and the second party towards the insurance contract is called as insurer. Who is insurer? Insurer is an artificial person, that is the insurance company who provides insurance policy. Okay, now many of the time, okay, third party is associated with this insurance contract. Who is the third party? Yes, the third party towards the insurance contract is called as insurance advisor. Who is insurance advisor? Yes, insurance advisor is a middleman, is a person who is appointed to make the insurance contract transaction easier. Okay, see, he is a representative of the insurance company. Okay, he is a representative of insurance company who approaches the insurer, who approaches the insured. Is it? On behalf of insurance company, he approaches the insured, and on behalf of insured, he approaches the insurance company. Yes, he is appointed to make the transaction quite easier. Okay, as we all know, insured might be any person, any individual, or he might be from the business community. Okay, now and then visiting the insurance company, it is not possible for this person. Okay, in such situation, yes, he approaches the insurance advisor, and on behalf of the insured, the insurance advisor approaches the insurance company. Okay, now see, many of the time the insured, he himself approaches the insurance company and completes all the documentation procedures, and he fills up the application form, he forwards the proposal form and all those things. Okay, after that, after proper judging this person itself, the insurance company or the insurer, it offers policy in favor of the insured. Okay, meanwhile amount is paid by the insured in the favor of the insurance company, which is called as premium. Okay, what is premium? Premium is a sum or amount paid by insured to the insurance company for having insurance policy. Okay, and whenever the first premium is paid, yes, there is commencement of risk. What is commencement of risk? Commencement of risk means after this, if okay, anything happens to the subject matter, then the insurance company is liable to pay you compensation. Okay, now just we have gone through a term, subject matter. What is subject matter? Subject matter means anything, any person, any asset on which you want insurance policy. Okay, see, repeat this: anything, any person, any asset on which you want insurance policy, it is called as subject matter. Okay, then it is, okay, claim and compensation. See, on the happening of event. Okay, if the event happens, event of loss happens, okay, and the reasons which are specified into the policy document, okay, due to the same reasons, if your property or your subject matter is damaged, then yes, then the insurance company is liable to compensate you. But okay, for that you are required to, yes, file a claim form. Okay, what is claim form? Claim form is an application in which you request the insurance company to pay you compensation. Okay, now the loss measuring officers and all those people, all the representatives of the insurance company, they do survey your property after the loss, and they calculate the amount of claim and they pay you the amount of compensation, a sum or amount paid by the insurance company on the happening of the event of loss. It is called as compensation. So this is the basics of insurance actually. So now let's move towards economic significance of insurance. Okay, what is economic significance of insurance? Let's see. Yes, see, whenever we consider insurance, okay, any person can have insurance, right, on anything. For example, he can insure his life. Yes, he can insure the property which he owns. Okay, he can insure his business. Okay, he can insure the trade. Okay, or anything in which he has insurable interest, he can, what he can do is he can have insurance on those things. Okay, or he can insure his life also. Okay, or he can insure his life of his dependents also. Okay, so whenever we think about the significance of insurance, yes, why it is quite important to insure? Yes, it has certain benefits, it has certain advantages. Okay, what are the advantages? Let's see. Okay, from economic point of view, from monetary point of view, how it is significant. See, first thing, encouragement of savings is done through insurance. Okay, insurance encourages savings, means, see, for example, okay, if you take insurance policy, what you are required to do? Yes, you are required to pay premium on a regular basis, maybe monthly, quarterly, half yearly or annually. Okay, these are the four options which are provided by the insurance company to you. Okay, now see, it is dependent on the value of policy actually, and the duration of policy. Okay, based on the value of policy and duration of policy, is it, they provide you the options to pay the premium. Okay, what are the four options provided to you? Yes, first one is monthly, second one is quarterly, third one is half yearly, and fourth one is annually. Okay, means, see, in some of the policies monthly you can pay premium. Okay, in some of the policies after completion of 3 months. Okay, means 4 times in a year you can pay premium. Okay, then half yearly means after completion of 6 months, that is twice in a year you can pay the premium. And yearly or annually means what, after completion of 12 months, that is once in a year you can pay the amount of premium. Okay, these four options are provided to you. Now see, whenever it comes to monthly or it comes to annually also, okay, yes, you are in need of insurance policy, and for continuing the policy you are required to pay premium, right? Okay, now you make a provision for that premium, is it? See, if you have xyz amount of income, is it, if you have a specific amount of income, okay, first of all, okay, you need to keep aside the amount of premium. Okay, so as your insurance policy will be continued. Okay, so in this way a habit of saving will be inculcated amongst yourself. Okay, fixed amount you keep aside. Okay, you invest those funds into insurance policy. And whenever it is endowment policy, see, whenever it is endowment policy, what is endowment policy? Endowment policy means a policy which is taken for a fixed duration or fixed tenure. Okay, see, for example, with some of the motives such type of endowment policy is taken. Okay, for example, it might be your future provision, it might be children's education. Okay, with such specific motive itself you take endowment policy. See, after 20 to 25 years, whenever you will be doing such type of heavy expenditure, okay, it will be quite helpful for you, right? Okay, so a habit of savings will be inculcated. Then generation of employment. Generation of employment. What is generation of employment? Yes. Okay, see, uh, the insured as well as the insurance company. Okay, see, whenever it is not possible for the insured to now and then visit the insurance company, whom does he approaches? Yes, he approaches a representative, that is insurance advisor, right? He approaches insurance advisor. Okay, now who is this insurance advisor? He is a representative of the insurance company. He is the representative of the insurance company, right? Okay, now whenever this we think about this insurance advisor, yes, okay, not a single insurance advisor works for the insurance company, there are many more. Okay, see, in this 21st century, as the business is growing, okay, people don't find work people don't find the time to visit the insurance company, so they will be approaching representatives, they will be approaching insurance advisor here. Okay, the insurance company can provide employment opportunity in respect to insurance advisor, right? More and more such type of employment opportunities will be provided. Even okay, see, the businessman, whenever he insures his business property or whenever he insures his business, what will happen? See, whenever he insures his business property, surely, okay, he can expand the business, and when it comes to expansion of business, yes, he will be providing employment opportunities. So overall, from both the side, that is from the insurance company side and from the insured sides, okay, such type of generation of employment, it takes place. Okay, then infrastructure development. What is infrastructure development? Development of the property or the physical resources or physical assets of the company. Okay, see, whenever we consider business, okay, yes, the businessman, he insures his property. Okay, he insures his property, and he becomes relaxed. Okay, he becomes relaxed. Why he becomes relaxed? See, um, so whenever we consider the businessmen, okay, when they feel relaxed, surely they can establish expansion plans and all. Okay, they can expand the present business. Is it? Whenever they expand the present business, yes, they will strive harder to develop transportation, communication, as well as the property of their business. Right? Okay. So it facilitates infrastructure development. Then promotes economic development. Okay. See, if now, uh, whenever we consider whenever we consider infrastructure development, yes, surely businessmen, okay, they can develop infrastructure by relaxing their mindset, by ensuring their business. Okay, then promotes economic development. Okay, see, overall, whenever the business grew, okay, overall, whenever the business grew, surely it has a positive impact on the economic development. Okay, see, the backbone of the economic development itself is development of the businesses or enterprises. Okay, so whenever we go through the economic development, okay, surely insurance helps to expand the business grow. Okay, or they help to expand the businesses, and in turn it helps to, yes, to have economic development. Then facilitates agriculture and rural development. See, agriculture is the backbone of our country, right? Many is it more than 60% itself, occupation, for occupation more than 60% of our Indian population, it is dependent on agriculture. Okay, or farming or agriculture itself is the backbone, or it is the main occupation in rural areas. Okay, so whenever we consider this agriculture sector or rural sector, okay, what happens? See, the people, the villagers, okay, they invest all their funds into agriculture and farming. And what happens? Okay, see, whenever we consider agriculture, it is prone or it is dependent on climatic conditions. Okay, see, the crops, is it, which the farmers they do cultivate. Okay, due to many of the diseases prevailing in the plant, due to many of the reasons, usually the plant may go fail. Okay, so crop insurance is one of the option provided by the insurance company, so that they can, so that they can um, stay relaxed. Okay, and if there is an event of loss, or if the crop gets destroyed, then surely they can lodge a claim and they can get compensation for such type of losses. Okay, and they can relax while they are farming. Okay, relax in the sense, see, through free mindset they can move towards farming or agriculture. Okay, and in turn the rural artisans and the rural people, they can be benefited through this, because more and okay, if agriculture is prevailing, then surely employment opportunities will also be provided to the rural people. Okay, then increase in foreign exchange reserves. Okay, see, insurance motivates the businessmen to have international business or international trade. Okay, they can establish international market, or they sorry, international trade, or they can switch over towards international markets. Okay, whenever we the businessmen engage themselves into international trade or international business, surely it results into increase in foreign exchange reserves. Is it? See, in the event of import and export, okay, we will be going through the foreign exchange reserves. We will be going through the, yes, foreign exchanges, right? For example, if we establish transaction with any foreign country, surely what will happen? It will, yes, increase the foreign exchanges, because we will exchange our currency against their currency, right? Okay, so it will surely increase the foreign exchange reserves. Then facilitates the development of capital market. Okay, see, the capital market, that is it the finance market, right? The securities market. Okay, now whenever we consider such type of market, what happens? See, usually uh, as our business grows, as our business expands, is it, surely we will expand the capital structure, or we will change the capital structure. As we expand the capital structure, surely, yes, we will search for the source of capital. We will invite shareholders or investors to invest funds into our organization. Yes, for this we will approach the capital market, right? There will be exchange of shares, there will be exchange of securities and all. Okay, in turn, the capital market will be developed. Okay, whenever repeatedly transaction happens in the securities market, surely it will lead to development of capital markets. Okay, so in this way, whenever we consider insurance, insurance is very important, very significant. Thank you.